Sunday. Hope everybody had an awesome weekend. Mine was really good. I just got done cooking some shrimp scampi. It was really good. And now I'm all carved out, ready to go for a new trading week. We have the futures markets that are open. We will be talking about what happened last week, what drove the market, where do I think we're going, and what obstacles could be in the way of this market continuing up higher into the new week and weeks. So we're also going to talk about some charts that are setting up really nice. I think all of them are longs, and I have a couple of chart requests I need to get to for members. So let's begin. We have the E-minis that are open, and they just gapped right up. They are up 0.18%. I believe we're a little bit higher before. Let's drill down to a 2-minute view. Yeah, we're going to pull back here in a minute. A lot of enthusiasm. We're getting some follow through on Friday's close. We closed very strong, very solid day on Friday. I'll be honest with you. After I saw the consumer sentiment numbers came out, I did not expect it. I did not expect it. It looks as though a lot of emphasis was placed on the fact that the consumer's anecdotal opinion about inflation was bullish. Okay. And the street took that and ran. Seymour, thank you, Seymour. Jeff, good evening. Talon, good evening. I thought about you and I was cooking tonight, Talon. It's time to board the Warren Buffett Energy Express, buy the XLE, destination higher, yield is 3.71%. Yeah. I like the XLE. I like it for your argument. I also like it from a premium perspective because when you take a look at the implied volatility, and we've discussed this before, but for the benefit of those that are out there that are new, the implied volatility on XLE is 54%. Very, very attractive from an option selling perspective. But if you want the dividend, certainly I'd be a nibbler here. Yeah, I think, Jeff, there was a lot of shorts covering because they had to. But, taking a look at the volume was respectable. So I would love to say I think that it's purely shorts covering. I don't think it was. I think you had some institutions that were putting money to work in the new year. Let's go back to the futures action. Trader Isaac. Yeah, absolutely. We really need to get our act together and get rid of these rhinos too. Let's take a look. We did the I just want to check back in with the E-minis to see if they retraced. They're going to now. For whatever reason, my windows are opening up on my other screen, and I never set that up that way. All right, higher, high. Okay. Let's go to the NQ. This is the NASDAQ 100. Wow, gapping up 1/3%. On an intraday basis, I mean, the Qs are very, very overbought intraday. I think we're going to get a retrace tomorrow. We may close positive, but Friday was just a one-sided day. It was just, well, actually, I shouldn't say that. It was a two-sided morning back and forth, and then finally it just ripped up higher. And the late morning and full afternoon was just one-sided trade. So we're opening up strong here, but remember, we are very, very overbought 15-minute, 30-minute chart intraday. So they're going to have to pull this back tomorrow. So if they gap this up tomorrow, I'll probably be leaning into the short side on it, on the retrace. And that would just be a scalp, not for a long-term trade, not even a multi-day trade. Let's take a look at the Dow. Dow is up 0.12%. Transports bullish key reversal bar on the week. Russell 2000 up 1/3% as well. They were a little bit slow getting out of the gate on Friday, but ultimately they performed very, very well on Friday. You know, a lot of this action in the markets is based on AI. We'll go to a chart in NVIDIA in a moment in the semiconductor space. But if you think about it, you're a small business and you have AI as a tool now. Think about the margin expansion you could have in your business if you get a killer app using AI that allows you to not have as many employees, not have to outsource to other vendors that you could do in-house at a cheaper price. So I think that, you know, everybody's got their eyes on the AI equipment stocks, NVIDIA, case in point. I think what people are missing are the efficiencies that AI will bring to the small caps. So I really like the small caps here. They're laggards relative to the Qs, but that's what makes them attractive to me. They have yet to get that multiple expansion due to AI. Hey, Jody, welcome. All right, so Russell, the equity markets, strong close here. But again, we left the day very, very extended on Friday. The dollar, it is opening down. This is the close on Friday, so this is measurably down. Let's check in with the euro. Euro is up. Euro was down on the week, but it rallied off the lows of the week. The yen did not have a good week at all last week. It's pretty much of a basket case. And it is down at current. Yields. Yields are down by about a 0.5 percentage point. That's going to allow the equity markets to move up higher. But the weekly chart of the 10-year yield is looking pretty bullish. We are at resistance, but we are looking pretty bullish on the 10-year yield. Now, looking at what else do we want to look at? Crude prices. Crude is down. That's bullish for equities. Not so bullish for the economy. And the reason why I say that is because demand concerns, perhaps, or it could be just that we have more supply than what we need right now. Let's take a look at nat gas. Wow, big gap down here. Wow, nat gas down 6%. Woo! Whoa. That's a big move. Even for nat gas, that's a big move. Sorry about that noise. Can't shut it off. That's a big move. I'm thinking about a trade here. There's a trade to be had here. We'll talk about that more tomorrow. What else do we need to take? Let's take a look at silver. Silver down, no great shock. Gold. Gold is flat. You know, they're pushing out. We're going to talk about this more. I'm going to have a chart in a moment. They're pushing out interest rate cuts, and that's going to weigh on gold. So right now, I'm a bystander here with gold and silver until such time as the dollar really begins to break down. So that may happen before they do the rate cuts because of economic concerns or what have you. But right now, everybody wants risk on. This is a risk on environment, and it's not a good environment for gold, silver. It's just nuts. I would just sell calls against positions and wait for a drop in the dollar. Disaffected Canadian, love it. Hey Bob, did you hear that Biden advisor claiming Red Sea battles will take time? How long do you think till shipping rates affect pricing of oil and goods? Very soon. They're not going to eat that cost. That's going to be a pass through. With oil, we're the largest producer of oil here in the States. So I don't think that we're going to get a big spike in oil prices right now. However, if you start seeing shortages over in Europe, Asia, whatnot of oil due to the fact that they're taking those tankers down around the Cape of Good Hope, then yeah, they're going to raise prices here. They don't care. They're not patriotic. They want to make money, even though they're drilling here. They'll jack up the price or sell it on the open market and get a better price overseas. So uh, it can have an impact. The fact that they seem to be slow walking this resolution in the Red Sea. I mean, I don't know how we don't have this under control by now, but we have horrible leadership, so it's no great shock. How will you buy SQQQ or scalp SPXS? I did a trade on SQQQ the other day. It was like a 24-hour trade. We made a few bucks. We got out. I think you could do SQQQ if they gap the market up higher tomorrow. I wouldn't carry it though. I don't. We'll talk about the stumbling blocks for the market in a moment, and the big difference between where we are right now relative to where we closed on Friday there's a big difference. So stick around. All is not perfect with this market right now, and we'll talk about the history of how this rally began back in October and what's changed since then. All right, so yeah, for a scalp, sure. You want to scalp the SPXS, QQQ, SQQQ, go for it. I don't see anything wrong. I just wouldn't carry it overnight. Not right now, anyway. All right, let's go to the weekly charts. Let's just check out some agriculture and livestock because we eat meat here in the United States. We eat meat. Hear that over in Davos? John Kerry, you horrible individual. Fourth consecutive up week for live cattle, but this could be a dead cat bounce. So hopefully we see a break on livestock. And I think that if it appears as though that President Trump is going to be president yet again, you're going to see the price of cattle drop like a rock. Let's take a look at agriculture. We'll begin with soybeans, continuation breakdown last week. There's going to be a trade to be had here. We had a new closing low, but no weekly lower low intra-week. So we're probably going to bounce soon on soybeans. Corn, another down week. No bueno. That's probably going lower. Wheat prices. Wheat. They rallied off the lows of the week last week, but you have a lot of overhead supply above. So, you're taking a look at the agriculture names tonight, the energy names tonight, nat gas down, oil. Let's check back in with oil. Oil was down earlier. Yeah, crude will be just fine. So Brent, this is Brent price. This is not light sweet crude, but different price of the barrel. But on a percentage basis, They're both down. So nat gas down, oil down. You have ag down. You have protein down. So if anything, for the everyday consumer, it seems as if that the sentiment out of the consumer on Friday, it may be anecdotal, but it has some validation to it as well. So when we just validate it, we're seeing prices come in here a little bit. But on the weekly chart of oil, oil's firming up. Gasoline prices were up over 2% last week. So it only takes a few weeks of gasoline prices moving up higher, and the consumer is going to be bearish yet again. So let's get to what's coming up this week, and there's a lot going on. He's one of my haters. He's this is my favorite hater. All right, I won't block you. Just be nice. You're welcome. You're welcome. Okay. All right. Let's talk about economic data that is coming out this week. We have leading indicators coming out on Monday. Tuesday, nothing happening. Now, Wednesday, we get the S&P 500 Services PMI. That's the Purchasing Managers Index. Now, any read above 50 is a sign of contraction. Any read below 50 is a sign, is a sign of expansion. Any read below 50 is a sign of contraction. So we've been holding in here on services for quite a while above 50, but just barely. Now, the manufacturing PMI, which also comes out 9:45 a.m. Eastern Standard Time on Wednesday, that's been in contraction for over a year now. So if this number comes out weak, below 50, expect a rally in the market. Expect it to continue up higher. So the reason for that is that they're probably going to have to push forward rate cuts. Thursday, this is the preliminary Q4 GDP. So this is the first read on GDP. Initial jobless claims, we get that every week. Durable goods orders. This is larger ticket item goods, washers, dryers, refrigerators, etc. Any item, big ticket, lasting a few years in lifespan. Very important number coming out on Thursday. If this comes out hot, that could be a problem for the market, because if the consumer is too optimistic and spending too much, buy now, pay later, well, that's a problem. And the Federal Reserve will be less likely to want to cut rates into all of this optimism. Watch inventories. Discretionary names behaved pretty well last week, but watch inventories, because if you see growing inventories, that could be a problem due to the fact that you might have to have retailers cutting prices to get rid of that excess inventory. So if you're trading those discretionary names, even staples, watch out for that number. To me, it doesn't matter all that much. Friday, personal income, PCE index coming out on Friday. This is very similar to the CPI. You have a core, you have the headline number. The Federal Reserve, this is their favorite inflation benchmark. So everybody's going to be watching out for this number. So pay close attention to it, because the Federal Reserve will be. And don't forget what they did last week. They probably already have this number, and they sent the Fed heads out there all last week trying to jawbone down expectations of a rate cut in March, and it worked. We'll go to that in a moment. Now, valuations of the equity market. So valuations we're at a high we haven't seen in a couple of years. So this is a rear view mirror PE ratio on the S&P 500. We're at 32.57. Now, we have earnings coming out this week. We've already had the banks report. the regional banks, money center banks. Now you're going to start getting into the manufacturers. 3M is going to come out early. I think it's on Monday coming out. Monday or Tuesday, maybe Tuesday. Monday's usually a quiet day for earnings. And you have Tesla, you have IBM, we're going to go to that in a moment. But a lot of companies are going to be coming out this week, and this market is priced for perfection. Looking at, if you're wondering about what could be a problem for this market, beside the fact that we're very expensive, is that when we this has actually just changed since the last time I looked at this. When we closed out the day on Friday, there was a 51% probability of a rate cut. And that's important because the Federal Reserve, Jay Powell, never disappoints the market. What you see on this tool here is what you're going to get on Fed rate day. As of a couple of hours ago, when I started prepping for the show, this is at 47 and change. Now it's backed up to 49.3. Now, the reason why this is important is that, we'll come back to this in a moment, is that we need to remember how we got where we're at right now. Remember, the market back in late October was in a free fall. Everybody was worried about a double top, a breakdown to lower lows, and all of a sudden, Jay Powell came out. All is right with the world. Speculation began to build about pause. Then we got the next announcement that we're probably going to get a rate cut. And then that was it, baby. Woo! Straight to the moon, Alice. And here we find ourselves again, breaking out to new all-time record highs. Yet, the reason why we got the rally at this point in time no longer exists, not from March anyway. And even when you go out to May, they increased this. Earlier today, this was like at 88%. Now it's back up to 100%. All right. June was 100%. Now it's 98.5. July 8. Okay. So the longer months, May, June, July, they still look firm. March, it's very, very questionable whether or not we're going to get a rate cut in March. Now, the Achilles heel for this market is that if we get inflation that heats up and then eats away at the probability of an ease in March and then begins to eat away at a probability of a cut, cut in March and then a cut in May, if we get hotter inflation data, or if we get economic reports coming out that are stronger than expected. Why is the Federal Reserve going to cut rates if you have manufacturing going gangbusters? I have a chart of that in a moment. They're not going to do it. There's no sense in doing it. They need to be worried about inflation ramping back up if they cut rates. And don't forget, by virtue of the fact that the stock market is going up and is at all-time highs, guess what? That's inflationary. And the reason why it's inflationary is that, like anything else, equities are an asset and they're being forced up. Look at as a reminder, they are very expensive. This is an inflated number. Add to that, if you're seeing your 401k, your IRA, your brokerage account going gangbusters because you have 100 shares in Neftlix and NVIDIA are going through the roof, well, you're going to be more prone to go out and buy that new car, that new thing. And then what happens? You have too much money chasing too few resources. What does that do? Drives up inflation. The Fed is all watching this. It's a game of chess, not checkers. So when you take a look at whether or not this market has legs to go up higher, it does. What you're looking at here is the S&P 500 bullish percent index. And it's a sentiment indicator, just like the consumer sentiment number was a sentiment survey on Friday, sent the stock market up higher. This is just another way of looking at it. And we were extended, and some of the froth came off. Usually when you get too high It means there's too much bullishness, but we've pulled back, found support, bullish reversal day on Friday. It looks as though we're probably going to begin to pump up higher. So is this an indicator for me to go shorting the market right now? No, not overnight. Not in any. I will say this. I did take I put on a short spread of the Qs on Friday in anticipation of a sell-off. I didn't want to carry it over the weekend, but I figured it was a pretty safe bet that we're probably going to get at least an intraday sell-off Monday, Tuesday. And if they gap us up again tomorrow, I'm just going to build on the position if they don't alleviate. And just so you are aware of what I'm talking about here, QQQ, 15-minute chart. We're ridiculously overbought here, and we're due for a pullback. So expect that. And if they pull it back tomorrow, I'm just going to exit the trade. If they rally it tomorrow, I'm going to build on the trade in anticipation of a pullback. I'm not betting on a crash or anything like that. I think that this market can continue up higher, but it's not without its Achilles heels. And that's what we want to talk about tonight. Because when you take a look at the yield curve, the yield curve, we began the week last week with a big surge up higher, and equities didn't like it. But by the end of the week, we closed down on the week. The however is this, and for those folks not familiar, you get worried about the equity markets when the yield curve steepens. A lot of people worry about when it inverts. That's not when you worry. It just the markets are telling you, listen, you're probably going towards recession. But it could stay this way. I mean, hell, we've been inverted on the yield curve for I don't know how many months now. We inverted back here, July of 22. So we're now into 24. So we've been inverted for quite some time. The problem is that while the weekly chart is bullish for equities, it pulled back. The problem is on the monthly chart. The monthly chart, you're getting a breakout. And if we close at the highs of the month, then you should be worried about the equity market's ability to continue up higher, because when you get a steepening of the yield curve, bad things tend to happen when the yield curve uninverts. So a word of warning going into the new trading week and weeks. What else is out there that could be a problem for the stock market? Well, take a look at the 10-year yield. The 10-year yield gapped up last week and didn't look back. Momentum is building. Now, a lot of these companies, Meta is one of them, prime example, they got lean and mean. They already did layoffs about a year ago. So they're lean. So they could probably take a much higher interest rate than what they could a year ago. So they still have some room to run. But I think that once you get up to 4.5, 4.3, things are going to start to get a little bit two-sided, up day, down day. A little bit volatility is probably going to rise if we start getting up there. When is the Federal Reserve interest rate decision? That will be the 31st of January. Seymour Rivers. Thank you, sir. TZ Burton, hello. Danny, I can't believe you're doing the podcast tonight. Aren't you a Bills fan? I am a Bills fan because it's the only New York team. My other teams are New Jersey teams. I'll listen to your reply after. Talon. Danny, that's right. Fed will not allow to happen 4.3, and we're going down. Yeah, in that range. You start getting above that level. I mean, take a look at the last time. And we have to give ourselves a little bit of room. A lot of these companies have gotten leaner now. So they can handle that additional cost. But if we overlay the breaking point of the equity markets. And to be fair to the equity markets, when they were fighting a battle of rising yields and the expectation of higher a Federal Reserve that was raising interest rates as well. So we got up to what? We were up to 4.9. We were up to nearly 5% on. Actually, no, I apologize. Wrong. That's the S&P 500 overlaid here. We got up to man. To be fair, though, we were looking at rate hikes here, so it's not fair to say the market buckled at a 3 handle. We're not looking at rate hikes right now, unless, of course, the Federal Reserve comes out and says we got to raise rates because manufacturing is too strong. But I have a chart that tells me no, manufacturing is not too strong. In fact, it's breaking down. So I think that given the fact that we have no expectations of a rate hike in the future, the worst the market's expecting is a pause. I think we could head up to a 4.3, 4.45 handle on the 10-year before the markets begin to buckle. Now, looking at this is the Dow Jones mining index. This is the wrong chart. The mining index, I thought this was the manufacturing index, breaking down hard. So if you're looking at industrial metals and precious metals right now, it's not the time. But this is also an indicator, because this is inclusive of precious metals, that names like copper. Let's check out copper's price action last week. Weekly chart, copper. I want to bring up the manufacturing. Yeah, copper was down last week. Actually, no, it was up. It did a bullish reversal bar. This is this week now. So maybe we'll get a bit of a respite here on mining stocks. We know gold had a rough time last week. Let's bring up manufacturing. Actually, packaging containers is what I want. And we've broken out here on, so this implies that we have the Dow Jones Industrial Average moving up higher, bullish reversal bar on the Dow Jones Transports, the U.S. Containers and Packaging Index, that broke out in December. We're down so far in January, but this is a fairly bullish setup. We broke out of a multi-year consolidation. So, there are reasons for concern. If you have a breakout in packaging and containing, a move up in the transports, move up in the Dow transports, why wouldn't you get a move up higher in yields? Just makes sense. So I think that the more bullishness that we see in the transports, Dow Jones Industrial Average, the less likely it becomes that we get the pause or the easing that the markets have come to expect. And God forbid that data comes out extra hot, then they start thinking about another round of rate hikes, then all bets are off. Earnings had better be very, very good this quarter. All right, so this week we're getting UAL. I mean, wow, what a slap in the face they've gotten last week in terms of headline news. Tuesday before the bell, Verizon, 3M, GE, RTX, J&J, Halliburton, Lockheed Martin. So a lot of defense plays coming out this week. P&G, Staples name, D.R. Horton, Home Builder. In the evening, Neftlix, Texas Instruments, Baker Hughes, Energy Play, a couple of extra banks, regional banks, AT&T before the market on Wednesday. Abbott, more drugs coming out. ASML, I love the chart of ASML. I have it up already. More financials coming out. After the bell, On Wednesday, we get Tesla, IBM. AAL comes out pre-market on Thursday. Alaska Air, Southwest Air, Valero, Refining, Dow Chemicals, More Financials, Union Pacific Transport name. A really good mix of names coming out this week that'll give you a real clear picture of who's doing well and who's not doing well. So you have a lot of transports, you have drugs coming out, you have technology coming out, defense coming out, Intel after the close, Visa coming out, KLA and Tencor. Lots of semi names coming out this week. L3 Harris, more defense. Norfolk Southern coming out on Friday. That's a railroad. Colgate Palmolive. That is a staple play. So the big ones for this coming week are going to be Tesla. So Tesla, Wall Street forecasts, they will be reporting earnings of 74 cents per share in an upcoming release, pointing to a year-over-year decline of 37.8%. Think about that. It is anticipated that revenues will amount to $25.94 billion for Q4, an increase of 6.7% compared to a year ago. So revenues are rising, yet earnings are declining. That's margin compression. So if you wonder about why Tesla is not doing well, look no further. Add to the fact that they cut car prices over in China and I believe in Europe last week as well. Now, looking at, what is this? Looking at Tesla relative to the triple Qs. This is a ratio chart. So relative to the triple Qs, the price of Tesla has been a major laggard. In fact, it's down over 14% on the year so far. Think about that. Now, as a standalone ticker, daily chart, very oversold. You know, if earnings weren't coming up on the week, I would buy Tesla right now for a swing trade. But I'm not going to buy it in front of earnings. So that too much of a binary risk. I may trade earnings here with a deep out of the money strangle or iron condor, but not buying the common in advance of earnings. Now, the other name coming out on the week, the big one, Pimp Mac Daddy, Neftlix. Average estimate for EPS, $2.22. Revenue, wow, $8.71 billion. Some big numbers out of these companies. Now, the big news that people are going to be looking for on Neftlix, as always, is, where is it? Subscriber growth. And here we go. Ad-free appeal. This is subscriber growth. And how is their ad-supported subscriptions working out? And the other thing that is going to be interesting, this password sharing. My argument, I think they instituted this about 2 quarters ago. So you got to figure that anybody that wanted Neftlix and couldn't use their friends or their neighbor's password any longer has already gotten Neftlix. So I would think that could be a possible Achilles heel for Neftlix going into this announcement for new subscriber growth. Now, KK, welcome. All chip-related stocks and tech hold the most interest to me for call options, scalping, the video. Well, all those names that I know of anyway, AMD, NVIDIA, they all look great, but they're a little bit extended. I don't think you could argue that. They're a little bit extended. They're a little bit over their skis right now. But that doesn't mean you go dumping them if you're a longer term holder. Now, looking at the chart of Netflix, I want to do a ratio chart first. Now, Netflix has been lagging, not as bad as Tesla, but has been lagging. This is, again, a ratio chart of Netflix relative to the triple Qs. And Netflix has been lagging so far on the year. What are we up or down so far? We're down 3.5% on the year so far on Netflix versus being up 2.85% on the triple Qs. So Netflix is a bit of a laggard here. And I've traded earnings on Netflix. I stopped doing it because it had two back-to-back quarters of third standard deviation moves that were just ridiculously horrible to live through, and I'll never do it again. So beware of trading earnings on Netflix, because when these institutions dump, they dump really, really hard. I've weathered that storm before. Now, looking at the news going into the new trading week, Ron DeSantis backs out and backs Trump. He did a good YouTube video earlier as well. Sports Illustrated went woke, gone broke. Sports Illustrated. I'm seeing a lot of optimism about the influence of the World Economic Forum and the woke culture, DEI, in corporate America. And I think that 2024 is going to be the year that it gets shown the exit door. I mean, they put obese women on their cover and they went woke. They're no longer in existence now. So earnings call sentiment, Red Sea mentions hit record high as fears mount of snarled supply chains. This is a problem. I guess this is Google Trends. This is a potential problem, and it's not going away. We've been covering this since day one. So they need to get this under control, toot sweet, like yesterday, or else if it affects the Straits of Hormuz, look out below for this equity market, because if there's an issue in the Straits of Hormuz, oil goes like this, equities go like this. All right, so the driver of the equity markets by far last week was the semiconductor sector. On Friday alone, it was up 3.81% on the week, up nearly 8.25% on the week. Think about it. Now, going back to this chart for a moment, there's more upside to be had here. Generally, when you get a bullish weekly candlestick like you saw, you're probably going to get more upside. The problem for the semiconductor sector, I just got a Charlie horse. Wow. I worked out my legs today. So the problem for the semiconductor sector is that you're leaning into the third standard deviation Bollinger Band. We're not supposed to be there. I'll save you the technical jargon. You're not supposed to be there. And when we've been there in the past, it doesn't end well. Here, back in May, pullback. Here, back in July, pullback. So if you're thinking about buying up here, I wouldn't. I can't tell you what to do. If you own the SMH, great time to sell covered calls. Really great time to sell covered calls. Now, looking at how we closed out the day on Friday, very extended. It was a strong close. A strong close, no doubt about it. This is a 15-minute chart, but we are very extended. So if they decide they're going to spike this market up on Monday, I'll be leaning into the short side. Now, a few names I like out there. This is more of a dividend play. Plus, you have upside potential. I love this chart. This is a Morgan Stanley. I believe this is a preferred, yielding 6.38%, if that's what you're into. But look at the breakout here on this chart. Very, very nice. This wants to go up higher. Daily chart. Oh, this is a daily chart. Let's check out the weekly chart. This wants to go up higher. Look at this consolidation. So I'm probably going to be buying some of this for my core portfolio tomorrow. Now, taking a look at ASML. I mentioned this earlier. I love this chart. This is one of my favorite charts going into the new trading week. It is in the semiconductor equipment group. Yes, it's a $750 stock. I would buy the call options on it. And taking a look, and it is top tier in the group. 99 composite rating by Investors Business Daily. They report on the 25th, so I can't buy before earnings. A little bit pricey, but it's a great company. ROE 55.9. That's huge. That's great stuff. Sales 25%. So a really good looking company on a fundamental view. And when you take a look at it on a weekly view, look at this bullish key reversal bar on the week. If you're not familiar with this terminology, link below is my 5-part video tutorial, my top 5 favorite candlestick patterns, free. Take advantage of it. So take a look at what we did last week. I think any pullback and a retest of 725, I'll be a buyer of ASML after earnings. Now, if after earnings it drops down to that support level and earnings come in at around what was expected, I'm a buyer on that pullback. Daily chart. That's not a daily chart. That's a daily chart. So it's gotten a little bit too much in front of its skis right now. Same thing with AMAT. Great company. But yeah, I can't chase this right now. Can't. All right, what else do we have here? I don't know why this is doing this tonight. It's driving me crazy. Arch Coal. Okay. All right. So to me right now, Arch Coal is a scalp short. It's again another name that's got in front of its skis. It's probably going to get a pullback. Let's check out an intraday view here. 15-minute will do. We're very long in the tooth. Very powerful close though. But they were trying to take it down. Buyers stepped in. Look at this volume at the close. So again, we have another name that's trading up and into its third standard deviation. Bollinger Band closed right at resistance. I think we're going to get a retrace here on Arch. The however is when you're looking at the big picture, the weekly view, it's gorgeous. This is a gorgeous breakout on Arch Coal. AMAT we already discussed. Qualcomm, another semi-name. You know, these have all gotten way too ahead of themselves for my taste. And we did this already. We have 10 minutes left. I need to go to Wendy. I can't forget Wendy. She requested a couple of symbols from me. Wendy, where are you? Where are you? Going through my, this is our Slack forum for members. This is our BS area where we share information. We just have a good time at. And then we have different channels for trade alerts and whatnot. Wendy, here she is. Okay, she's looking for AGQ. That's silver. AAL reporting this coming week. DWAC. That's a name that's gotten ahead of its skis. Folks, we're going to be using TrendSpider, automated technical analysis, linked below. 35% discount code or better. Go to their website using my link, and they may even have a better deal than 35% off. So, Wendy, you have not been forgotten this week. Silver, we don't want to touch it right now. Dollar's still too strong. We had a pullback on Friday, but it couldn't get the silver stocks moving up higher, gold stocks moving up higher. So right now, I'm not loving silver right now. It broke down below not one support level last week, but two. I like it longer term. Right now, I'd be selling puts, deep out of the money puts, generate some cash flow. If it's assigned to you, great. You got it at a discount. But that is my take on AGQ. Right now, you want to avoid, especially since it broke down on a weekly time frame. And it did so as well on a daily time frame. And this is the power of the automated trend lines that TrendSpider provides. Click of a button, and there you have it. Okay, the next one for Wendy, AAL. Again, they report earnings. Now, this is a name that we spoke about a few weeks ago, and I was bullish on it, but the breakout failed. That was here. And it did actually, it moved up higher, but then it failed to hold. And last week we had a bullish reversal bar off of this moving average, 21 period moving average, and you have the VWAP immediately below on a weekly time frame. Daily, so weekly time frame bullish. But remember, earnings coming up. I don't like the price action on Friday at all. It got stuck at resistance. So if you're gonna buy this ahead of earnings, you'll probably get a pullback tomorrow morning or tomorrow afternoon on AAL. You have immediate resistance above here, though, at the fractal resistance lines. Last one for Wendy. DWAC. All right, so this is one that has certainly gotten ahead of its skis. So this is the SPAC for Truth Social. You had President Trump, who won the Iowa caucuses. He's probably going to win New Hampshire. And you had Ron DeSantis drop out today. This is already very extended. I would be a seller on any rally here. It's way too ahead of itself. It could probably go up higher. It's got really good volume, but I would be selling the rally here. Wait for a pullback, then jump back in at a support level. Where might that support level be? Well, let's go to the weekly chart first. Yeah, you can see we rallied right up and into a trend line and got stopped there. So where we'd be looking for support is, you can't just say VWAP. My VWAP is an average. So yeah, maybe here at the VWAP, but that's rising. That's going to change. Right down here, $23 per share, I like as a retrace on DWAC. Hey, Bob, what do you think of Crowd? Way overbought. Yeah, CrowdStrike, that broke out on a daily chart about 2 weeks ago. So the weekly chart is very bullish. It's still bullish. Where's my RSI? RSI is extended. We have RSI at 82. But guess what? We have Dow companies that are out there right now with RSI above 80. So, CrowdStrike, this is a mid cap company. This can go higher on RSI. Yeah, it's overbought. If I'm an owner of it, would I go selling? No, but I would be selling covered calls on it, and I would still carry it. So CrowdStrike still looks good on a weekly time frame. Daily chart RSI still has room to run. The problem for CrowdStrike is that you're going to get a lot of resistance between 295 and 299 per share in that range. But I think you have more upside to go here on CrowdStrike. I'm not a seller. For Jody, save. Did I get all? First, I got to make sure I got my members taken care of here. We'll definitely get you, Jody. Okay, we're good. Save. Why is my keyboard not working? Save. There we go. All right, so I know Dave Portnoy bought this. He bought call options on it. I think he's up on it. I don't like it. I don't like it. He's saying he's going to hold on to it. I think he's nuts. I don't like it. The best you can hope for is some sort of a short covering rally. I'm sure that you have a ton of shorts in this name, but I don't see the setup yet for that short covering rally. We'll keep an eye on it. And let's see. We're not going to have the latest short interest. It's usually like a month behind. Short interest as of December the 29th. That's fairly recent, but this is before the news. So you have an average 3-month daily volume of about 12 million shares. Divide that 12 million shares into shares short. Not much of a short covering rally here, unless, of course, you have a lot more shorts in the name now than when you did on the last reporting date of December the 29th. I don't see a compelling reason to be long here. It's going to take a headline event for this stock to go up. An appeal, a successful appeal of the blockage of the demerger. But other than that, it's 50-50 which way this thing's going to go. At best, 50-50. ENPH, Enphase. This might catch a bid, and I'll tell you why. And you're saying this is a solar stock. I know the company. I don't know its business. Solar Edge came out today. They're laying off 13,000 employees, something like that. And that may have a ripple effect on this space, because if they're going to do it, the assumption is going to be that other companies are going to do it as well. So you've had a nice pullback since mid-December. It's technically still broken out of a downtrend. We have support, which we broke down below last week. That support level is at about 107 per share. If it closes back above 107 per share this week, I think it's a buy. But be careful. A lot of times what they'll do after a breakdown is they'll rally it back and they'll retest prior support. And a lot of people hope. They'll hope that, it's going to close back above that support level. What happens the following week? It drops down. You want to see a close above 107 by the end of business on Friday of next week. If not, I would avoid it. Snow. What did I type it in wrong? Yeah. Weekly view looking awesome. Pullback, orderly consolidation. It's a good looking chart. Bullish key reversal bar last week, closing at the highs of the week. On Friday, we had broken down on Thursday. On Friday, we had managed to recapture support. Bullish stuff. I think this stock is a buy. Nice looking chart. You're welcome, Jody. Have a great night. Last one up for tonight is going to be for Improved 69, BDRY. All right, so a good-looking week last week. We had a pullback off of a resistance level. The problem is that we're heading right back up towards that resistance level. And I think to remember, this is a dry bulk shipper. I don't know this one. I think to remember about when you go after another resistance level again, the probability of getting through it is greater, because you have a lot of those sellers that were up here that sold into this strength. Well, they're gone now. So the probability of getting through there again is all the more greater. So I think the weekly chart looks good. The fly in the ointment is, of course, we don't know it's going to get through that resistance level. You're going to have a battle there. So I would be a buyer on a close above let's call it $12.25. Daily view. Down day on Friday. It's still not bad. I mean, it got extended. It hit at the top of its Keltner channel and it pulled back. Not a bad day. It was down on light volume. I still think there's more upside potential for this stock. The only thing, again, that I'm worried about is the fact that we have overhead supply, what we saw a few weeks ago. And that's it, folks. Everybody have an awesome, awesome remainder of your Sunday and have a profitable trading week. Like, subscribe. You know the deal. Thanks for being here. And everybody have a great night.